Welcome to the end of week review for this week. And this week, what a week we have. Have a tremendous week. A lot of price action, especially on Friday when the Fed Chair Jerome Powell, made a statement that he likely gonna cut rate. Then the market really rally. So yeah, we are in week 34 right here. And next week will be 35 and we are still in Q3. So Q3 right here. Right, and September gonna be our finished Q3 and then we go to Q4. So for this week we start at August 18 and we finish at August 22nd. So we have five, full trading day. This week is amazing. One thing we learned from this week is the Monday is so where do we move on Monday? It's most likely it's like the market not move on Monday. It's very strange. And we did took a trade, by the way. We took got a trade on Monday and we lost. By the way, we trade in the testing account, for lack of a better word, practice account, because the main account we blow up last week or the week before last week. So we have to wait for the reset. Every month it reset for us. If we don't have to pay for reset so every month, and we pay for the subscription. And we read some on the Twitter or X account. Some guys say don't trade on this Monday. So somehow that guy knows something. That's amazing. Let's find out what if it's possible find out his tweets, but if not, we can move it on. Yeah, we tried to find his post, but we couldn't find it. So next time we will try to document it so we can share here. But anyway, his idea is that don't try on this Monday. He knows something that we don't know. And we try to look at the chart, the daily charts. On that day, it may give us some clue, right? Let's go to the Monday. So here's the Monday. Right there on the daily. That's it, the daily on Monday. And here's at the end of day, and look at the 15 minutes. 15-minute time frame. So that's the daily. Here's the 15 minutes. So what do we see? So you see the huge open and then it break. It take the low of the prior day PM, but however you see right here the liquidity, the sell side liquidity right here, it not taken yet. Remember, this one is the PPI data. Alright, so you see the huge move right there, and you see the candle after the expansion is not take out the low. That means this down move is not finished yet. So that's what our suspect right there. We pay attention to this level. We know that it's not finished yet, and it did come back. You see that? That is the Thursday last week, and then the Friday it sell off, but it have not take out the clear. And then the London on Monday, it take out a low of of the Friday, but the low of Thursday, it not haven't taken out yet. So very interesting right there. So let's see what the end of day for the Monday. Okay, here's the end of day for the Monday. End of day, we need to end of day. What's end of day for 15 minutes? Oh, interesting, huh? We don't have the end of day. End of day. We only have the beginning of day. End of day, yeah. We have an end of day right here. Yeah, okay. So here's end of day on Monday. And look at that. It barely moved. Look at the 9:30 right there. It's right in the middle of wow. Maybe the lesson we learned is that that when you see the 9:30 is right in the range of London and also in the prior day PM and also at the open 8:13. So don't touch this on that day, I guess. And look at the 10 right here. You have 9:30, 9:40. Look at the 10. The 10 is what we learned this before. Yeah, let's go back to the theory that we have with the candle at 10. That's our theory right there. Candle at 10 or cat. Candle at 10 theory or cat. Right. Yeah, we couldn't find the post. So next time we will do better when we see that post. We don't know what the guy knowing, but what he says is become reality. Basically, he know what he doing right there. He don't give much detail why we should not trade on Monday. So then our job is just reverse engineer, go back to the Monday with this week to see what the condition that make is very hard to trade on a Monday, this Monday special. So now look at the charts on Monday, right? Here's the Monday. We take beginning of the day, so we call beginning of the day, 15 minutes right there, and then you look at the daily right there. So you see the level right there. We draw this level, but later on we can draw at this level also. Do we have a drawing tool in here? No, we don't have a drawing tool. But the level you can see right there, it also means that what setup we have here, break, test from above, and reverse. We saw this. We saw it every day. You see that every time. So we need to be more disciplined. Right? Don't blow up our account on a low probability setup. Wait for this setup and trade. Okay, wait for the setup and trade. If there's no setup, then there's no trade. We remember that there's one guy, he said that I don't trade the markets, but I trade my setups. It rings true to us. It makes a lot of sense right there. So we have to trade our setup. We already have our setup, then trade it. Don't waste our capital. Capital in this case can mean both, right? Psychological capital and also money capital right there, right? So we need to stay disciplined, and it's the hard thing to do. It's not easy. It requires to be stay focused and stay committed. Don't do the easy one. Do the hard thing to do. That where we can transform ourselves. Anyway, so right here we see the test from above. Then Friday is go back to the level. It break the level. And Monday we thought it's gonna be a follow through day, but somehow Monday is maybe it does not have enough liquidity. Oh yeah, it does not have liquidity. Then it just tried to build up liquidity, and then on Wednesday it ripped down right there. So the Monday is a very interesting day. Go back to our 50-minute time frame, the end of the day. You see that on Monday it barely moved. Then we reverse engineer, see why we should not trade on Monday, on this particular Monday. That jot down some note right here. We did say we did take a note, but now let's put into yeah, we did have this theory. We go back to the theory. Here's what we say right here, and go back to the theory that we proposed last week about the candle at 10 theory. And candle at 10 o'clock. T stands for 10 right there. 10. Right at 10 o'clock right there. Candle at 10. Okay. Oh, let's just see. 10 a.m. in this case. Alright, candle at 10 theory. So if the candle at 10 is in the range of the 90 and 45, and then they are in the range of London, and open range, open 1800, right, 18 hour range, then there's no trade. Okay, and look at this exactly. It opened in that range, opened in the London range, and that's three conditions right there. Right in the range, let's break it down. First is in the range of 40-45. You see that? The second, they are in range of London, and is in the range of this, then no trade. See that? It's three conditions right there. So if in the range 45, in the range of London, I mean they rest mean three candle right there. Three candle, which is the 10, 945 and 930 is in the range of the London, and also in the range in the here, yeah, you can say in the range of open range right there. You got a point right there. Then there will be no trade. So that's how we reverse right there. You see that? Candle at 10 right there. So keep in mind, candle at 10 is very important. So from now on, we will try to build our trade around that candle at 10s with our setup, which is type 1 reversal and type 2 reversal, right? Let's look at those two setup we have. Alright, here's the setup that we are learning, we discover, and we try to try around that. The challenge for it right now is make it consistent. We haven't been, profitable, yes, because that two thing right here, right? You find the edge of the setup, and now it's execution. So now we need to work on our execution. Right now, our execution is not consistent. We still take the trade that our setup. That's where we still struggle. So we have to do better job at execution. We have a setup, we have an edge, but we need to execution. That's the second leg that we need to work on. Right? You have a setup, and now you need execution. And execution is the key. Require patience. So right here you have on the left you have type 1 reversal or 4 breakout. It can be reversal or it can be continuation right there. And type 2, right? Type 2 4 breakout. Okay, let's fix this real quick. Alright, so we fix up the verbiage right here. So basically it's a 4 breakout. We remove the reversal. It can be reversal or it can be a continuation. So we have 4 breakout type 1 and 4 breakout type 2 right there, which is include 3 steps. The first one is gonna be for the type 1, it's gonna be break first and test from above and reverse. That's the short setup. For long setup, break, test from below and reverse. This is a short setup, is the long setup for type 1. For type 2, also do 3 steps, but size slightly different. The first step of the type 1 it break, but for the type 2 it test, break and reverse. That is the type 2 right there. And from our observation, the type 2 likely taking place in the continuation. Basically you have a first leg up or leg down and then the retracement. The type 2 happen in the retracement right there. It tests, break and reverse, it goes to the next leg up, next expansion move right there. That's a continuation. For the type 1 is likely happen on a reversal. Basically after it finishes the second leg down or the next leg down, then it's reverse. Vice versa, right? It go up and then retracement, go up and then it reverse. So that's what our setup. So now we need to build our setup into the idea of the candle cap theory with candle attend theory. That's the theory that we come up. Let's see how it's play out. So for the Monday, very interesting, right? So we apply that theory in here on the candle attend. We see that we come up with the theory right there, which is what it in the range right there. So no trade. By the way, like we say, we did take a trade. We look to some trade. Let's see how we took our trade, right? All right, here's the screenshot we take the trade. So basically, we see that the level right there. You see that we draw this level, but in this case, we draw this level. So it's give us some idea better draw. So you see it break the level and it test from above. The last Thursday it tested from above. And then Friday is going down, but it did not test the level, yes, right? And then Monday we thought it's gonna follow through. It's gonna follow through, but look like it did not have enough liquidity. See that on Monday it did break down this level. Is that right? Yeah, and it stayed there. It did not continue to go down. Yep. This is the 15 minutes, right? And then we take a short trade right here. Is that right? Yeah, short trade, and the hour is right before 10. Okay, so it go into our direction. Boom. We got stop out. So we switch to long. We say, well, if it's not short, then long, then are we short again? I think we short again. Yeah, we shorted. Boom. Then we take out. And then we come back at 11, and we saw that, okay, you see the test from above twice right there at level, so we thought it's gonna be going down. All right, so we add more contract right there, and we see that it's gonna come down at least here level. This is a daily time frame. Boom. It did not go out. It go take out. It did not come down. So it take it out right there. So we got 2 trade in the row. And now we short again. Boom. It did go to this target, but it did not hit what we want. So we just stay in the trade, and we got 2 out again. So that is the trade we took on Monday, and we learned a lesson that do not take that trade. Do not any trade on Monday. Remember, now we need to learn that we only take very selective trade. Maybe 1 trade a week, that will be the best. Let's see if we stick to our plan right there. 1 trade a week. Don't try too much right there. Just 1 trade a week. 4 trade a month. Yeah, let's see what is at. Yeah, but it come back right away. So right here in this trade, we do have a good setup. Yeah, good trade. We shouldn't take our profits. That's up right here. You see that? You mark this candle. You see the level right there. Test from above. Then it kind of reverse, which is what? Which is a type 1 reversal, which is very reliable. You see that? It's the type 1 right here. Break a test from above, it's gonna reverse. See, it test from above, 1, 2. You see the level right there. Let's go to the chart. We may see something. All right, go back to the chart and go back to the Monday right here. So yeah, you see that candle. You see test from above. This candle is 230. Or you can see this candle. Because we engage right here. Yeah. Is break the level here, because in the in this one, the candle right here, you can do level, but it's a little bit different than this one. Is trading view. The one with you right here is think or swim. So it kind of a little bit different, but you have a general idea right here. Is a 445 time frame. 3. Yeah, this is the last candle right there, the Dow close. Let's see over here. Yeah, this level, but it's a little different than this one. But you have the idea right there. it test from above. Let's say for this thinkorswim we use this level. The aggregate data is different from different platform, right? In this case we have thinkorswim and TradingView. They are different aggregated data. But right here we see that we take 11 trade right there. You can see that the setup test from above, it will be reverse, right? Break, test from above and reverse, then our target should be take early profits. Yeah, so that's the only thing that we can see. All right, that's the Monday right there. Give her the idea of solidified the concept or the playbook that candle at 10 theory that we come up right there. So we're going to continue to solidify this and refine this. Okay, now go into Wednesday. Right, when you go into Wednesday, you see that the Monday is supposed to be followed through Friday, but it did not have enough liquidity. So what they do, the market maker need to build up liquidity, so they build up on Monday. So that's why Monday is very hard to trade. So you go down to Tuesday. Here's what we see on Tuesday. All right, on Tuesday, what is our beginner on Tuesday? So here on Tuesday right there, we see that we still go with the level, but we can go with the level. You can see that still test from above, so it's gonna be sell off on Tuesday. Okay, it need to fill the gap right there. You see the gap. Yeah, very interesting, the gap fill. Here we can see it's a very bullish right now. You see the gap up and then there will be a gap down. So that's what we see. And here's what we see in 15 minutes. So it's still, yeah, it did take out a pretty bright day right there, and it moving down in London. So yeah, Tuesday is beautiful setup. So go back to the daily, you see that, so it's gonna sell off, but it gives you the chance to go sell high. And that way you need to go in and sell high. Let's look at the temps on Tuesday. All right, here's the tip that we have on Tuesday. Now let's rewind it and see what happened. To fast forward. All right, pay attention at 10. All right, here's the time right here. So pay attention to that. Wow. So what happened on Tuesday at 9:30? You see that at 9:30? The 9:30 is curve. You see right here. Wow. Very fast. Okay, look at that. So whoever is short at 9:30 had to take a quick profit. Look at the 9:30. Look at that. into 2 minutes. You see it's huge sell up. So if you take a short right here, you have to take profits. This is at 9:32. Let's take a screenshot. And alright, let's continue to play the tap, and you see it retrace. So if you don't take the profits quick enough, you see, wow, you see you have to take quick profit if you to trade at 9:30 right there. So now look at the 9:35. So the 9:30 haven't taken any liquidity. You see that? The 9:30 haven't taken any. It didn't take London low, neither. It did not take the open range and the prior day high and all. So not much liquidity were rated, so we should not engage right there. But let's see. Okay, so now here, right here, remember we have a candle at 10 theory. Okay, so right here, 59. That's right there. So what we're gonna do? We see the level right here. It touched from above twice, so it will break it. It will try shortly here. So that whole idea right there. And okay, now see that candle at 10. The 9:30 and the 9 is still in range right there. Then wait, you need to wait more. You see that the 9 and 9:30 is still within overlap together. It's not break out of range. Oh, okay, so we can see the setup right here. So you can see test, break test from above. You can see right here. That's the candle right there. You see that candle? Let's take a screenshot right here. So you have a setup at 10. So you see the candle right there? This candle, let's draw this one. See that? It break, test from it below, then put a buy stop right here. And then it's gonna reverse. That is type 1 reversal. Type 1 for breakout. Type 1 for breakout right there. See that? Type 1 for breakout at 10. Yep, type 1 for breakout at 10. So you have break this level, and then you have test from above, and then you anticipate the reverse. So when you come back to this level, it must reverse. So that's already right there. So this is the three steps that we're talking about in our setup. Is gonna be first is break, let me make it a little bit smaller. All right, a lot smaller. Right, you break this at 9:30 right there. You break the level, and 9:45 is what? It tests from below. Right, TFP, I mean test from below. And then you anticipate right here it's gonna be reverse, and it happened at 10. So that's, and if that's the case, then there's gonna be a so-called fall breakout type 1 right here, right? Yeah, a break that level, which is happened at 9:30. And then you have a test from below at 09:45, and then you have a reverse at 10. We don't know, right? We anticipate that was why we're gonna delete the question mark right there. Let's see if that's the case. Okay, let's save this one. All right, we just save this. All right, close this, and continue to play the tips. See that? Let's say yeah, boom, boom, boom. Okay, so we should take a good decent profit right there. Yes, the target should be this open range high right here, opening range high. Then we should good to go. Yep, we should good to go right there. You see that? Don't stay too long, you get in trouble. So yeah, 15, stay there until 10:15. You should be done. Let's see how it's moving. Wow, you see that? If you don't take profit, you're gonna give back right away. So 10:30 reverse the 10, and then 10:45. Now 10:30 is still in play. 10:15, and 10:30. 10:30 is still running. Wow, you see that? Yes. And wow. A little bit hard right here, but you can see the setup right here. Let's go back right here. We see the setup. It looked like it's not there, but if you look at that, it tells you right there. You mark this, a text screenshot right here. You have to wait for it to flip. Okay, in this case, let's go with this color. Okay, let's say you mark. What do we have? You break and you reverse. Okay, you can mark this high right here, London high. Oh no, the pre-market high, not London high. So what you have? You have test, break, and reverse. And this one should be follow up, even though it looked like it not follow up, but it flipped, then it will follow through. Follow through. See that? You have to anticipate right there. It's very tricky to see, but it's there. So basically you have right there the 9:30 test from below. Test from below. See the 9:30 test from below. That's the 9:30. And then you have break it level, and then you have the 10s break it and 10-15 reverse, and this candle is supposed to follow through, but it looked like not follow, but it flipped, it follow through right there. So if you enter it right here, then your stop loss has to be this candle high, otherwise you will get kicked out when this candle reverse back. It looked like it's gonna stop you out right there. So you have to give yourself enough stop loss margin to stay in a trade before it goes into your direction. This one is test from below. Set from below at 0930. And then yeah, we don't give the time right now. Give the time on later. So you have tap from below, and then you have breakage. Second, you have break, and then you have number 3. Step 3 is reverse, which is type what? Type 2 right here, right? That is the type 2 that in our setup. In this case, for breakout type 2. Review again. Here's our type 2 right here. You have to test first, it break and reverse, and the type 2 normally is in continuation, which is right. In this case, you see the first leg down right here, and this one is just a retracement, and then boom, it's gonna continuation right there. So right here we have a test from below at 9:30, and then the break happened at 10. At 10, and then the reverse happened at 10:15. Reverse right away. You see that? That's the measure of the setup. Yep, reverse right away. And the 10:30, it have to be followed through, but at first it looked like it not follow through. It go back to that level. So whoever go long on the 10:30 will get we get crushed. And look at the. By the way, let's save this one. So we see the tap right there. So as soon as the 10:30 got flipped, let's go back to the flip right there. You can see at 10. $10.30. The first 3 minutes, it looked like it not going to the short direction. Yeah, right here. Yeah, you see that? Yes, so right there, it looked like it not follow through. Let's keep in mind right here is the type 2 we're talking about right there. So test from below, break and reverse, but the 10:45 look like it's not gonna follow through because it go back to this level for 3 minutes, go back to level, but look, it flipped, which is it follow through. We make a second leg down. Next leg down, you see that? It is a first leg down, a retracement, and then boom, next leg down, which is another expansion. That's the reason why we saw that the type 2 is happen. The type 2 happened in the continuation right there, and it happened in the retracement, which is perfect. And here is a retracement. That's a type 2. You test, break, and then you reverse. That's a type 2 continuation that we see right there. In this case, yes. Yeah. Put in there is a continuation in this case. Continuation. In this case is the next leg down in this scenario right there. See, that is the next leg down. First leg down, retracement, then next leg down. That's how powerful it is to see that. We need to stick on our game. Just when you see the setup, do it. If not, then don't do it. Yep, next leg down. Let's save this one. So there's a next leg down right there. And we look on the high time frame. That's it, the level that it gonna break that level right there. Yeah, that's level. And you see the gap right there, it come down to that level. You're gonna come down to the level. So let's see. Boom. Boom. Keep go down. This is just a retracement, and then you're gonna make, yes, that way, flip right there. Yep. Boom. Okay, by the way, we did just pause here. We did took a trade here on Tuesday. Let's take a look. Did we or we not? Okay, so we draw right there that level. We see it break down that level, and the fellow gap right there. Can feel the gap. See if we see any trade. Okay, so right here is at 12:30. We see the mark level. You see that it break test from below, which is what? Type 1 right there. We thought that's good. It's okay. We don't blame ourselves. And I think we did take the trade. No, we didn't take the trade either. So we didn't take the trade. We thought a setup right there, but we feel like we're not gonna pull a trigger. But if you look right here, don't go right there. If you go long right there, you see the setup, break, test from below, and reverse. But the time was at the time. So if we go in right here at, this is the 45, right? 30, not half one. So, but if we wait right here, you have the setup level. It tests 1, 2. It's just one more, and then here we go. It flipped. Let's see. Yeah, so we go to the BM. No, wow. No, it continues to go down. Okay, so right here, you may have the setup right here. Break. Let's see. Do we have a setup right here? Can we go long right here? So it's a 130 already. Yeah, do we have any setup? So the last Dow candle right there. Yeah, you can see that right there. Test from above, break and reverse, but it not really convincing. So let's see. Oh, you see that? We may have a setup right here. Look, look, look. Let's take screenshot right here. As soon we see this, and look at the time. It's 2 p.m. So we may have a setup right here, my friend. So you see that level? The last huge Dow close candle. You see that? So it's break, test from above, and a test from above, break and reverse. Let's see if the reverse right here. So we anticipate. Oh, you want it to be a reversal type 1. Let's see if it's otherwise it's gonna be a reversal type 2 right here. You see the reversal 2? Which is test from above, break. You want it to be break, and then you anticipate a reverse, a next candle reverse at. So this candle is a 14. You want a reversal happen at 14.50. Okay, let's see how it's play out. All right, let's see how it's play out in the. Yeah. Oh wow! You want this to rate order sell side liquidity so it can reverse. Let's see. Let's see. So we want to play the reverse at the next candle, right? Which is 14.50. All right. So if this candle go back at the level, then we can play the reverse right here. All right, so let's save this one for now. All right, let's take screenshot of this. So we anticipate 14.50 where it gonna reverse. Let's draw the same level and set up again. All right, so you remember we mark this right here. Okay, see that? See level, test from above, break and reverse to see that one reverse. So that is our anticipate. See the test from above right there, and we see the break. All right, we want to actually see this one to be a reverse. Okay, yeah, let's see it's play out. Keep wiring the tips, let the tape rolling. Look for the reverse. If not, then it's okay. Yeah, see that? They will not happen. Okay, so it continue. Wow, maybe late in the game, 30 more minutes to close, so don't take any trade anyway. It's too late. It did not happen, which is fine. Oh, you see that? It's late into the game. Yeah, but that says. So what we anticipate did not happen, which is fine, right? It did not happen. It happened later, right? It would be perfect if it happened right away, but it happened later, but it's too late, so we should not take the trade anyway. So we're good for Tuesday. Now go to Wednesday, see what we learn. All right, now jump into Wednesday's midweek, the very important. So look on the daily time frame, you see that the Tuesday already break that level. So we just move to look level instead of the level. So we can see that. See that the setup breaks that from above one, and then twice on Monday, and then Wednesday it break that level. So this is our what? This is our type 1. Let's do the markup on this. Let's do the markup on this. So right here, ideally you want the break happen right away or the next candle, but in this case it holds itself. That means it needs to build more liquidity because the down move, they have a lot of let's say the market maker, they receive a huge amount of short order. So that's the reason why they need to build the long order in order to match them. So by Monday they're supposed to what? They're supposed to let deliver price down here, but they don't have enough liquidity. That's the reason why you see the Monday is very weird right there. But also the Monday give us the idea that it tests from above also. So you have test from above twice, then you see that the down move on Tuesday is very intensive. It's a huge expansion, and ICT have a term for that. He called low resisting liquidity run right there, which is a impulsive move. That's another word called it. It move very fast. And our job is just be patient, wait for that day. Wait for the day that you see the market maker build liquidity and then they go down and they just take all out liquidity right there. And they keep behind the fingerprint that we identify right there. In this case is the fall breakout that we keep talking every week right there. So you have what? You have break right here. That's our break right there. It's break. And then you have a test from above. In this case, you have twice. Test above last Thursday and Friday. It did not test level, but Monday it tests again. You see that? And then Wednesday, boom, it reversed. See that? That do it right up. So you have what? You have first is break. That's how the market move. Market not move like straight line. It's up, down, up, down, up, down. But in the long run, it's all up. If you're talking about year, up every year. So just stay long. If you want to hold investment long, year after year, then you're good. So test from above. In this case, this is the Thursday, and it's the last Thursday, by the way, last. And then we have one more time, which is the Monday. Yeah, I test above. In this case, is 2 times. Then the down move, the reverse, is very intensified, and that's exactly happened on Thursday. Right, you have that. and then the reversal right here, which is 3. Reverse. So, and perfectly, you know that we observe and that this is the 4 break of type 1, right? Type 1 is very reliable on the reversal. Reversal in this case on Tuesday of this week. So you have a break that happened. So this is Thursday. So Tuesday. Break on last Tuesday. Wow. You see that? It break on last Tuesday and then this Tuesday it reversed. Oh man. 2, then you have a test from above is on last Thursday, and one more time on Monday, this Monday. Then you have break on the Tuesday. Look at that. That's amazing. See that? That is a 4 breakout in this case reversal. It's perfectly fit our setup. Alright, so that's the beginning of Wednesday right there. So let's see if the Wednesday follow through, continue to down move, and gonna take liquidity from right here, this candle ran right there last Tuesday. Let's see if it's gonna take the liquidity right here. That's our anticipate right there. And let's look at the 15 minutes time frame to see. No, that's the end of the day. We want the beginning of the day of 15 minutes. That's how it look, right? So it open right there. So we anticipate lots of heat down here, so it's gonna come down. Okay, so that is the beginning. Now what the tip on Wednesday? Alright, let's go at the tip on Wednesday and see how it plays out. So what do we see right here? We see that the London it opened and it sell up. Maybe this is a first leg down and this is a retracement. Let's see, similar like on Wednesday. I mean on Tuesday. We are on Wednesday right there. So let's see how it's played out. Okay, so let's see. Fast forward. What want to see at 8:30 or 9:30? That's 9:30. That's what we want to see. Okay, so 9:30 right there. 29. 9:29. So right here we see the liquidity of the prior day low is weak in the London, and it opened above the London right there. So the market gonna move. It's not gonna be a range there like Monday. Alright, so let's see how the 9:30 and the 10. That's our. So you have a 9:30. Look like sell up. Big down close candle. Okay, 9:30. So we're gonna go finish at 45. Yeah. Do we see any setup? We have 4 breakout. Not really. You want a 4 breakout when the liquidity were rated. So okay, so right here the 9:30 give us the idea that market gonna move. It's not it's not like on Monday. You remember the Monday the 9:30 looked very ugly. That's the reason why market not moving. I mean, let's look at the 930 on Monday so we have an idea. We bring up the screenshot and I look at the 930 right there. You see that? It's not really ugly, but at least it tells you that we need more information, right? Basically, we need more information. If you're not sure, then don't do. And the 1030 give an idea that it's still in the range of 930 to 945, then forget about it, don't trade it, right? So that's the huge lesson. When you see the huge break right there, then we know the market gonna move. So we look for continuation of this trend, which is downtrend, or gonna reversals, but it's gonna move. And it's a Wednesday, the midweek, it's gonna move. It's gonna move. We look at WhatsApp. So the 45 continue sell hard. And remember, we want, so it's break down the level, withdraw for the daily. You see, we withdraw the level, it break the level, and also the low right here of this candle. What's the low for that candle? We have to put out this chart to see. So the low for this candle is 63.91, and let's see what is that. 63.91. Oh yeah, 63.97. All right, let's see it go down to 91, 97. Yeah, you see 84. That means it hit that level. So if we short, then that should be our target to get out. Wow, so this one is, how do we okay, so do we see anything right here that help us to identify this trade? Yeah, if you mark the London right here, what you see is it break, right? Reverse. Yeah, not much you can do. We missed a huge trade, right? But it's okay. As long as it's not in our setup, then we don't trade. We have to keep it consistent. Oh yeah, maybe you see this right there. It can give us some idea. Let's rewind the tape a little bit so we can see better. Yeah, so right here. Yes, so okay. We think we see something right here. Oh, interesting right here. $9.30. Right, that's 9.30. Move very fast. So look at this Dow close candle right here. This is the last Dow candle, very very big, right, expansion, and then this the candle after expansion. Here's what you're gonna see. So right here, what do you see? So you see that level, right? It's break it, test from above, break, reverse. There's no way it can come back. If it come back level, then it gonna break the level. See, that is the test from above, break, and reverse. You see that the one that should be a type 2, but it flips. So that the bottom line is you don't want it to go back to level. The only going back to level is to break it. So you can call it a type 1 right there. Break, test from above, and reverse. It did reverse. A little bit hard to see, but you can see that it doesn't make any sense for this 930 to come down here. The only You see it break the high of the candle also. It's supposed to be go up, break this candle right there. Remember the candle after the expansion give us the idea that when it above the level, and if we are bearish, then and as soon as above level we can short them. So let's see, what do we see? Test from above, break, reverse, test from above. That's type 2 right there, so that means a continuation, but in this case it flip. There's no reason for it to come back to a level. That's what we try to say right there. But let's mark it down. Test from above right there. Then if we go back, then it will reverse. So let's save this for now. Alright, so on Wednesday we have this phenomenal, even though it's not fit perfectly into our setup, but it have a phenomenal that expansion at 9:30. So if we look closely, we can see that after this candle right there, it gives us some signal. So you mark the high of that, and you see the fair value gap right there, and this candle we call candle after expansion. This guy expansion down right there. And you see that as soon as it above that level, it's gonna break it level. When it come down to level again, it will break, and it gives you some signal right there. You see test from above right there. So the up close candle right here is set up for the 9:30 to rip down. So the 9:45, that's a 9:15 right there. Maybe it does not have enough liquidity. That's the reason why. But if you look carefully, you see test from above right there. This one it break close down at that level. So the 9:15 is supposed to be followed through, because that is the type 1 reversal. Break right here, test from above. This one is reverse, and this one is follow through, but it did not follow through because of not enough liquidity. So the 15 up close, and then boom. The 9:30 rip all the way down, so you can see that, and we call this phenomenon is the expansion at 9:30. So at 9:30 it rip either up or down. In this case, go down. And on the other instant we saw is it took place on August 15, Friday. So you see the same phenomenon right here. In this case, it really this ran set up on the last Thursday when the PPI data come out. You see that when the liquidity above that level, then it's set up for the short setup, and the 9:30 really ripped right there. But in this case, we do have the setup for breakout type 1. Is that right? Yes, type 1. Which is it break the level and they stay above level, it wait for 9:30 enough liquidity, and test from above, boom, it ripped down. See that? That's ripped down type 1. See that? It ripped down. For this Wednesday, it's similar but not exactly, right? You do have break right at test from above, but it deviate a little bit, right? The 9:15 is supposed to be followed through, and then the 9:30 continue to go down, but it deviate a little bit because maybe not enough liquidity. So that is another deviation from our setup, but it looks similar like the type 1 breakout. So we need to put a note in here that is another deviation right here. So we have to time at the 9:30. So it's a deviation of the type 1, which is where you want to see the reversal. Oh yeah, in this case, not reversal. It is the first leg down. Is a continuation. But anyway, we run out of time. We don't want to run it too long, so we still have to do the one for 15. I mean for Thursday and Friday. But anyway, we're always grateful for this opportunity. We thank you for your time and interest. We do what we love, then just as come our way, day by day, little by little, we getting better and better. Have a great weekend and see you next week.